Hi, Kevin Coop here, and this is FaceTime with the Content Guy. I was fascinated the other day to see a story in the Wall Street Journal about how there are 650,000 open retail jobs in the United States, and that doesn't even count restaurants, and it doesn't count the warehouses that cater to those retailers. That's an awful lot of jobs. Listen, the economy is certainly improving. We've been on 6, 7 years of an improving economy. Things are getting better. Unemployment is just north of 4%. But the problem, of course, is that wages are largely stagnant. And there's a lot of discussion about this in the political realm, and I don't particularly want to get political about it. I know there's a conversation out there that argues that tax cuts will jumpstart the economy and lead to all sorts of growth. And that is certainly possible, and we'll have to see how that turns out. We'll have to see what happens in terms of tax cuts. But there's also an argument that I'm a little skeptical of, and that is that when companies get an enormous tax cut, that's going to lead to them hiring a lot more people and spending more on wages. I'm not completely buying that, and I think that's largely because we exist in a system where the management and leadership of most companies, most corporations, are rewarded based on how low they can get their labor factor and how high they can get their investor dividends, not the other way around. As long as that's the system in place, as long as that's how they're going to keep their jobs and they're going to make greater salaries, it's really hard for them to argue that we should give everybody in the company a raise. And if that costs our investors a little bit of money, they're just going to have to live with it because it's good for the company long term. That is an argument one does not hear being made very much. I'm just skeptical as to whether tax cuts are going to necessarily fix that particular problem. I think there just has to be a sea change in terms of how these things are measured, what metrics are used by management. I think there has to be a realization that, especially in an economy that's improving, that labor has to be looked at as being an investment and an asset, not as being a cost and liability. And I think in too many companies, that's the way they're viewed. And by the way, this goes for non-union companies as well as union companies. Union companies come with their own set of complications, but there's got to be a way to remake the system so that unions are viewed as a partner, not as an enemy. But by the way, that means the unions have to look at management as being a partner, not the enemy. They've both got to figure out how to make this thing work in unionized companies. Now listen, one of the things that's happening right now, according to the Wall Street Journal story, is that a lot of companies are looking past what used to be red flags, things like inexperience, like things like drug tests. That's how badly they need people, and that's probably a good thing. But at the end of the day, I don't think that's all that they can do. I think they have to remake the way they relate to and connect to their employers. I worked three different retail jobs in my early days, 2 clothing stores and a winery tasting room. And that's how basically I worked my way through high school and college so I could pay for my tuition. And in each of those places where I worked, the bosses for whom I worked figured out, listen, they pay me for my time, they pay me for my efforts, but they also figured out ways, and some of it was money and some of it's the way you treat people, ways to make me feel like I was invested in the company, that I would treat the company as if it were my own. I would be that passionate about it. They did it in different ways and to a different extent. I mean, we had different kinds of experiences, but largely in all 3 of those retail businesses, I really felt connected to the business. And I'm just wondering how many retail employees feel that way. Listen, some of it was me. I tend to feel that way about the places where I work. But some of it, quite frankly, was the way my bosses made me feel. Again, employers have to look at their employees and say, they can call them associates all they want, but unless those people feel invested in the business, feel that the business is invested in them, if they don't feel as if they're connected to it, as if they are viewed as being an asset to the business long term, not just short term, I think it's going to be really hard to turn that around. The best way for a company to have a full and happy employee base is to be the kind of place where they want to work. I think it's that simple. Of course, it's not that simple because it's really, really hard to do. Anyway, that's what's on my mind this morning. And as always, I want to hear what's on your mind.